The ability to identify strong points of support and resistance on price charts is a fundamental skill of price action trading. And more oftentimes than not, newer traders tend to put more emphasis on technical indicators such as Fibonacci levels, MACD, RSI, stochastics, Bollinger Bands, etc., and they overlook the importance of the fundamentals of price action, which is identifying strong levels of support and resistance on the charts. So in this video, I'll be breaking down the basics of how to identify strong levels of both support and resistance. This way you can improve how you go about taking your entries to trades, where you place your stop loss, where you take profit, and you get better at identifying turning points in price action. So if you are new to Crypto Empire, make sure you hit that subscribe button down below, like this video, comment on the video, and also make sure you have all bell notifications turned on as well. And let the gains be with you. Welcome to Crypto Empire. My name is Connor, and this is where we dominate the crypto markets. So to start off this video, I'm going to use an illustration to give you an example of how support and resistance does work if you're brand new and you've just never seen it before. So basically how markets move, they never move straight up, right? There's always going to be pullbacks and retracements and rallies and sell-offs. That's just the nature of how human psychology works, and this comes into interpretation through the candlesticks. So basically, support and resistance, if we have a market that's uptrending, we start making higher highs and higher lows, and then we have a sell-off, more oftentimes than not, we're going to come back down to a level of support and then test levels of resistance again before we actually do go ahead and move higher. So here we can see that price did stop right here. And now this would be identified as a level of support here on the chart. This is an area previously where buyers stepped in and drove the price higher, right? So we know from previous data that more oftentimes than not, when price does reach this level again, it will actually reverse. So as a price action trader, you're simply looking to catch volatile moves. You trade volatility. So that's why identifying strong levels of support and resistance is so critical, because you're looking for a point on the chart that price is going to react off of. This way you can use it for your entry, or you can also use it if you're already in a trade for your take profit levels as well as your stop loss levels as well. So for this example, right, if you were to go long here at this level of support on the chart, right, this would be your entry over here. And then you would place your stop loss right beneath that level of support, right? And then of course you would look for a 3-to-1 trade. I don't want to get too far ahead, but you always look for at least a 3-to-1 risk reward. So if you're going to be risking 7%, you're going to want to go all the way up to 20% for your take profit, right? So that's basically how support and resistance does work. So now that you have a little bit of a better idea, let's go ahead and look at the actual price chart and give you real concrete examples. So we're going to start off looking at the Bitcoin chart, right? Bitcoin versus the US dollar, USDT. So I do have a yellow horizontal right here at the previous all-time high in December of 2017 at $19,798. So now if we look back to December of 2020, price, after enduring this crypto winter, the bear market, price did make its way back up to the previous all-time high of Bitcoin. Now I want you to notice how price reacted to the level, right? Right here in this green candle is where I am looking. As we can see, price touched the all-time high, and then this is a weekly time frame, by the way. I should have mentioned that. So support and resistance works on all time frames. It does tend to work better on higher time frames, like all price action trading does. So we can see here on the weekly that we went and we tested the level of resistance at about $20,000, and then we had a red week. We got rejected at resistance. Okay, so we look for how price reacts from strong levels of support and resistance to determine how we take our trades. So for this basic example here, we can see that price got rejected at resistance, which is common, and then on its second go around, it bursted right through the resistance, and then we marched higher to new all-time highs for Bitcoin. So that's one example of resistance on the chart. And now for our next example, let's look at more modern times of where we are right now. And we can even stick on the weekly time frame. We have this price chart where we made several lows here in January and February, right? So we can see where all these candle wicks wicked down we would identify this as a level of support on the chart, because we can say with a high degree of certainty that over here where these candles are wicking down to at about $28,500, $29,000, this is where buyers are stepping in. This is a level of demand on the chart where people are buyers. So we mark that with a line on the chart to identify that as an area of support, okay? And now we use this area of support several times here, as you can see in the weekly, with these long candle wicks down, and then we finally did burst above the resistance. And now if we're going to draw the resistance, how I would actually do it, it's just like supply and demand zones. There's no right or wrong way to do it. You can draw it at the candle body closes, or you can draw it at the extreme candle wicks. Whatever you do prefer, price does tend to react off of both levels. So I do recommend that you put your lines on both the candle body closes and the extreme candle wicks, right? The highest point of that trading period and the lowest point of that trading period. And this just lets you know that this is where buyers and sellers do step into the marketplace. So if we're going to mark this on the chart, we would mark our support down here at about 29K, and we would mark resistance over here at about $38,700. So what happened was price used this level of support, the buyers stepped in and drove the price higher. And then when we reached the level of resistance that we created, right, we see how we never closed above this level at about 38K. We had these two candles closed at the exact same price level. Little rule of thumb, when I see two candles close at the exact same price level like this, I always do tend to mark it on the chart, because this just lets me know as an indicator that this is a key level of support and resistance. So definitely take that one home with you. So we can see here that after we did bounce off of support multiple times, we bursted through resistance. And now after the fact, Bitcoin did make its new all-time high at $64,854 on the Binance exchange versus USDT. So we did then retrace back down all the way to this level of support on the chart. So that's why we have it marked here, because we know that with a high degree of probability, this is where there's a level of demand. This is where people are buyers, right? We know at about 29K, buyers step in and tend to drive the price higher based off of previous data in the charts. So that's why we have the yellow line here, and we can see that from these levels over here that happened in January and February, were again respected in May and June as well, right? Price wicked down into these levels of demand, into these levels of support multiple times, and now we're waiting to see what does happen next. So also another general rule of thumb with support and resistance, the more times that price does test the level, the weaker it does tend to get, right? So as we can see with this one wick here, price didn't exactly reach all the way down to the level of support, but just like if you saw my trendline trading video, it's not one finite concrete line that determines the support and resistance on the chart. It's more of the general area. So price wicked down into the general area of support once, and now it did a second time here, and now it did a third time. So more oftentimes than not, the more times that a level of support is tested, the weaker it does tend to get. I'll give you a concrete example to illustrate the point I'm trying to make. Imagine you have your house, and for whatever reason the feds are trying to bust down your door to get inside, and they have one of those big, logs that they use to batter down the door. On the first attempt, the door gets weaker. On the second attempt, the screws start to pop off of the hinges and the door's really weak. And on the third attempt, the feds just burst right in, right? They batter on the door and it bursts right open. So the same rule does tend to apply to support and resistance. The more times that a level is tested, the weaker it does tend to get. And that's just because there's more and more pressure on the level. If it's support, we have more sellers trying to drive the price downwards, right, to burst through that level of support. And if we have resistance, we have buyers bidding more, right, placing more buy orders to try and burst through that level of resistance on the chart. So that's just another general rule of thumb. The more times that an area of support and resistance is used, the weaker it does tend to get. So for our next example, let's take a look at the Ethereum price chart on the daily time frame. So let's go straight into marking our levels of resistance first. So we were trading in a sideways range here. This is a sideways market, right? There's no overall trend. So I would go ahead and mark a level of resistance where these candle wicks did actually wick up to at about $2,925, right? This is our level of resistance. We can see that every time price approached this yellow line, it got rejected. One time here, 2 times here. We had another test with this wick, and more than likely tested a supply zone where these candle bodies did close, right? So going back to what I said previously, I do like to mark where candle bodies close adjacently like that, and we can see we had another long wick down. This would have been a good shorting opportunity. And then for support, we would draw a line over down here. We have all these candle wicks wicking down. We have these candle bodies closing right next to each other. So I would go ahead and draw my yellow line down here at $2,096 for the level of support on the chart. So we can see what happened here is we were just bouncing. We were playing ping pong with price action, going between resistance back down to support, back up to resistance, right? And then we finally, after multiple tests, broke through the level of support here. So this is bearish. This means that buyers did not step in and drive price back up higher. The bulls lost, the bears won. And then also we can see that we had the lows over here at $1,740 approximately, and price did sweep down the lows here, right? So this can be known as a stop loss hunt. There's market makers out there, there's algorithms that know where you place your stop loss, and they intentionally wick candles down to stop you out of the trade before pushing price back up in the direction that you would want. So there was a lot of traders that did have long order bids placed here at about $1,700. So what the market makers did, they waited for those orders to fill. And a lot of traders do tend to put their stop loss right underneath levels of support, like right underneath their entry. So when we sweep the lows like this, this is more commonly known as a stop loss hunt. So definitely be wary of those. Always leave not too much space, but an adequate amount of space between your entry and your stop loss to avoid these sweeps that you'll see all the time in the charts. So this is support and resistance on Ethereum right now. We broke beneath this support over here at $2,096, and then we went and tested this support at this lowest wick here at about $1,733. We swept the lows. So we're waiting to see what does happen next. Like I did say, this is a bearish chart at this point in time. It doesn't look great. So we'll see what does happen. Overall, I would say that we still are range bound for ETH. Right, we're still going sideways here. We've been going sideways for about 40 days. So we'll see if this does continue this sideways choppy price action, or we'll see if the market does pick a clear direction, either upwards or downwards. So now let's look at Ethereum on a lower time frame to give you an example of support and resistance on the 1 hour. So if we drop it down to a 1 hour, we can see that the same rules do apply. So this was on June 23rd. We do have quite a steep drop over here. So where I'm looking is this candle wick right here, guys. I look at this candle wick and I'll draw a yellow horizontal line there. And now we can see that this was used as a level of support. Buyers stepped in over here at $2,042 previously, pushed the price up higher to about $2,200. And now we came back, and this is obviously a demand zone. We have a drop base, strong engulfing bullish candle rally outwards. And we can see price did actually test the demand zone here. I know I don't want to confuse you guys. This is a support and resistance video, but I'm just illustrating what actually happened here so that you can kind of ingrain the patterns in your head. So when the opportunity does arise for a trade in the future, you have some form of pattern recognition that you can go off of. So after we did burst through the level of support here with this strong move downwards, this bearish engulfing candle, price went ahead and tested the previous level of support, and it tested and it became resistance. So this is what's known as a support resistance flip. I'm going to write this out on the chart for you. So a support resistance flip is what happens when price bursts through a level and support flips to resistance. So we can see here, after price did break the support, it used it as resistance 1, 2, 3 times here, came back upwards. Resistance was tested here 2 times, right? It got rejected. It came back up for another test of the resistance, presented you with another shorting opportunity, right? It got rejected to the downside. Buyers stepped in over here at this level of support on the chart. You can call this a demand zone as well, right? And then we came and we tested the highs again near this area of resistance, and the bears stepped in with force and drove price downwards. So this level over here at $2,040 approximately, we know is a level of resistance that has worked multiple times in the past, and it's a support resistance flip. So it's a key area on the price chart. We look for these key areas because we know that in the future, when price does approach that key area, it will react more likely than not in some way, shape, or form. And we use that reaction either as a scalp, right? We catch the move off of the bounce of the support or resistance, or we can use it as an entry on a swing trade, right? If we're bearish on ETH, we would go ahead and put a short order in here, and we would try to ride the move downwards. So that's an example on the 1 hour time frame. I'll give you one more example before we do wrap this video up. I don't want to make this one too long, as this is going to be one of many videos on price action trading here at Crypto Empire. So for my last example of identifying support and resistance, let's take a look at the Cardano ADA price chart versus the US dollar. So we're looking on a daily chart here. And now the first thing that I do see here is clear support on the chart, right? I will draw my horizontal line here. So I'm going to draw it right here. I put my line here because it was first used as a level of resistance over here at 98 cents back in February of 2021, a few months ago. And then price did go ahead and eventually burst through the level of resistance. And now we can see that multiple times it was used as a level of support now, right? Price tested it here, formed a bit of a demand zone, which is what this test is. And then we swept the lows. Again, you always look for these stop loss hunts, right? It swept the lows here, but the buyers did step in. Price didn't actually close beneath the level of support here. If it were to close beneath, that would be bearish, but the buyers stepped in and drove price back up higher. So the level of support was once again respected, but the lows were swept here. And then again, after price reacted from this level, it would have been another great long opportunity. It's at $1, another psychological round number. In the charts, right, these psychological round numbers do tend to represent stronger areas of support and resistance. And then again, we have another wick down into the area over here. And then just a few days ago, we had another wick down to about that $1 price level, this level of support on the chart. So we know over here at about $1.98 that the bulls step in, buyers step in. So if we look at the chart and we can identify that buyers are stepping in at $1, what should you do? You should most likely be a buyer at $1. Now, like I did say before earlier on in this video, the more times that a level of support is used, the weaker it does tend to get. So at this point in time, in these uncertain market conditions, we do have to be a little bit careful, right? Conditions do change, so nothing is concrete with price action, but there are general rules of thumb, and that's why we always use a stop loss to manage our risk, and we don't overexpose ourselves to large losses. We always let our winners cover our losers with 3-to-1 risk-reward trades. So we can see that this level of support was respected multiple times. And then over here, we do have a level of resistance. I'm going to draw where these candle wicks come up to, and we can see that for multiple days this level over here at $1.82 was tested. We bursted through, we made another all-time high, and then price came back, tested support on an extremely sell-off day, and then off of this level of support, price came back and retested the levels of resistance. So this is all we're trying to do here. I'm just trying to give you a general rule of thumb about how to identify these areas on the chart so that you can apply it to your own trading. I don't mean to overwhelm you. This is just one video of many videos that will be released on price action trading. So we're going to go ahead and wrap it up right now. We're not going to go too deep into it. Definitely take these lessons with you, apply them to your own trading. Support and resistance is a fundamental of trading that you need to have down pat, quite frankly. Just like Michael Jordan said, the first thing he does when he gets to a practice is he does chest passes, right? He had the most crisp, fundamentally strong chest pass in all of basketball because he just worked on that over and over again. It was the first thing he did when he got into the gym. So you need to ingrain this as a foundational skill to your trading routine. You need to identify the strong levels of support and resistance on the chart. It will definitely improve your profit loss if you are not doing it, because you'll know that you don't want to be a buyer at resistance. You want to be a seller at resistance and buyer at support. So this video was a basic introduction to identifying strong levels of support and resistance on the price charts to help you in your own trading, so you know when to be a buyer and when to be a seller. We're looking for volatility to react off of these levels. We use support and resistance for our entries, for our take profit points. For example, if we're going to go long at support, we would identify the closest level of resistance on the chart to take profit at. So if you guys did find this video helpful, let me know down in the comment section below. I'll be making more videos about this topic to further clarify it. I really just did skim the surface of this topic in this video. So if you're new to Crypto Empire, smash that subscribe button, like this video, again, comment down below, and make sure you have all bell notifications turned on as well. And my name is Connor from Crypto Empire, and we will see you in the next video.